My big aha is it's like dealing with a deranged madman trying to estimate what the street will do. I spend no time on it. Utterly unknowable.
You don't need half your company, and Palantir and Shopify are proving it. You don't need half your company. Let's look at Shopify for a minute. From peak employee was 2022, 11,600 employees at Shopify. Since then, revenue has grown 91%, pretty impressive for a company at 11 billion in revenue. And employees have gone down from 11,600 to 8,100. Gone down while revenue's up 91%. He's ruthless, Zuck's ruthless, Karp's ruthless. And if you think you're gonna win in B2B, if you're not ruthless, you're gonna lose. Ready to go?
Guys, I am so excited for this. We have an amazing schedule in place today. I want to start with GPT-5. I think it's the top story of the week. Consensus is it's slightly underwhelming. Before I lead the witness, I'd love to hear how you responded to it. Do you agree it was underwhelming, and do you see it differently?
So my first experience was certainly underwhelming when it said we had the greatest market crash since the tulip era. But listen, that's what I think. But when I look at folks smarter than me, if Aaron Levy is running this through Box and saying redline and document comparison and term extraction is materially better, maybe that doesn't make those of us who are using it for therapy excited. I get that. But if he thinks it's materially better, and more importantly, you know, everyone's talking their game. If it's materially better at coding and competes with Anthropic, you know, that's $6 billion of revenue that they lost, right? So, but I get it. It does feel like it's a worse therapist at the moment, doesn't it?
I think underwhelming is great. Let me tell you what I mean by that. Underwhelming kind of took a little bit of the air out of these, you know, the kind of techno-optimist, we're underway to AGI, it's all going to revolutionize everything, all that kind of noise. You definitely felt a little deflate here, right? Which is great, because we're now at it's a really great piece of software for doing business, let's make it better stage of life, right? It feels for me, I remember, you know, the first, you know, Windows 95, yay, it's amazing, got a big launch, and then there's just a steady growth, or even the iPhone, better example. The early one, you know, great launch is going to change everything. And then you settle into 10 or 15 years of incrementally making it better until you plateau, right? And from a 0 to 1 perspective, that's not as interesting. But we're now in the grind it out, make it better, build a business stage of life, which I think is a more normalized world, right? And so there's two things in it. One, implicit in that is the statement, I don't buy any of this. You know, they're going to keep on getting better. Exponential takeoff, all that AGI rubbish. I've always assumed it's rubbish, and maybe I'm wrong, but at least right now, the evidence shifted a little more in the favor of, you know, perhaps not nearly as quickly as you think. Because from a business perspective, there's a lot of interesting shit going on here. And Jason nailed the first big one, right? They basically, and it's less from the product is good, though I believe two of my colleagues are more avid coders, not as good as the high-end Claude Code, the models, but a damn sight cheaper, right? And, you know, like 10x cheaper than most expensive token load based on what I saw, maybe 8x to 10x. And on top of that, it's noticeable Cursor now is pushing a GPT-5 based product, you know, and has free demos of that. You know, they're pushing that on their user base. From a business perspective, as distinct from a pie in the sky AGI stuff, this is exactly what Jason said. This is OpenAI going at a big ass pile of revenue that Anthropic has, and maybe Anthropic overplayed their hand a little bit by kind of bullying Windsurf. And as we discussed, if I'm now Cursor, a week ago, I'm sitting there going, or maybe a month ago, I'm sitting there going, my gross margins are set by my worst competitor, Anthropic, and now I'm ecstatic because the big ass guy in the block is now trying to, is now another vendor of tokens, significantly cheaper. I'm going to push the hell out of this. So that's a really big business comment. It's not as sexy as AGI making us all unemployed. But if you're trying to build a business and you're Cursor, this is the best damn thing that ever happened. Right? We have a competitive product at 1/4 to 1/10 the price, and I'm happy.
If I was Anthropic, I would be in that room rejoicing. And I think everyone, when I speak to the Anthropic team, are bluntly laughing. because, I mean, the demos were terrible. I think it was entirely underwhelming in terms of the presentation of features. You know, model compatibility into one and model routing, and we've now taken away. That's it? Seriously? We waited GPT-5 and you gave me better model? This is disappointing.
There's a reason for it. Sam Altman, in his own way, is a marketing mastermind like Elon Musk. He knows what he's doing. Okay, we can make fun of this or that. He's everywhere in the entire globe. He's doing Stargate, Farscape, everything. He's building everything. He is as perceptive as they get. He's dueling with Elon on who manages the X algorithm, right? The fact that this would come out with a bit of a thud was known to him and the team, right? So there's a reason they did it. Was it timing pressure? Was it to put pressure on the team? I actually don't know. I haven't seen it on the hundreds of Reddits I'm on. But this wasn't. This is like Figma. Us saying Figma was dumb. They didn't understand the IPO pop from last week. Neither is true. The idea would come out with a thud is not a shock.
Put me down is not quite buying that. You can feel free to, because I think, I mean, as a comment on, you can be directionally brilliant and entrepreneurially brilliant, and it's hard not to argue Sam Altman is both. But it's always worth remembering the most popular product they ever shipped. They didn't know they were shipping a good product at the time. ChatGPT, which is 70, 80% of the revenue dollars, when they shipped, they didn't even think it was a major release. They were focused on GPT-4 the following March. So I think one of the big ahas on that, and it's not where we went to go, but to go there is, you see this in venture often. If you're directionally correct and you have, big ass vision and drive and the ability to raise money, sometimes just that's enough and you kind of get the brakes on your side. But I don't think you have this. I don't think he or anyone has complete clarity at every step, and the level of what forethought that you're implying, Jason, on that. But I actually don't think it can. I want to go back to what Howie said, because I don't know the answer. It's interesting. You made a comment. You think Anthropic are laughing. They're definitely laughing at the thud, and it's hard not to laugh at the funny, stupid graph that was mathematically wrong. And oh my God, they must have burned someone after that at the stake, literally. But I do think, I'm not sure I'd laugh quite as much, because I do think, a renewed push on code and pricing and trying to get that business. It would be better if you're Anthropic to be a monopolist and the best product than to be an oligopoly where you still have the best product. Because I do think you're right. The consensus is, token for token, dollar for dollar, the Anthropic products do more and are more efficient. But, and this gets into a very interesting discussion, is with the pricing of if the pricing of the other product is low and good enough for companies really resting with gross margin, you're going to have some kind of use the cheap shit where you can and use the dear stuff where you have to, right? So I do think no one ever said, I'm really delighted my bigger competitor entered my market with a product 5x cheaper than us. I mean, so I don't buy it at that level, Howie, to be really direct.
Well, but I think that's a very moment in time perspective, which is like everyone is aware that if you're looking at like cost of tokens today, we're seeing them reduce so dramatically within a 12-month period. I don't think Anthropic are looking at that thinking there's a permanent chasm in pricing and we're going to be unable to match it. I think they're looking going, fine, they might have a slight efficiency on us today, but if our models are better, we'll win.
Yes, you'll win, but it just won't be quite as easy is my point. I mean, that's my point. We've gone from the pie in the sky for everybody. It's going to be amazing, flowers and sunshine, to the, okay, it's a slug it out war here. This is the advantage we've got. This is the advantage they got. So I say, I just think we're dealing now with just business fundamentals. Are you better off with the slightly better, 4x more expensive, that kind of discussion?
Rory, what was your second point? I interrupted you.
No problem. I mean, there's two or three. You have to take seriously, I mean, and I spent less time on this, but they shipped the open source products earlier this week. Oh, not last week, of course, now. Right? That was interesting. After 2 or 3 years of 2 years plus of no open source. And I don't have as good a handle on the motivation there. Is it to mess with Elon because he's saying they're not open source? Is it because they genuinely feel that's a feeder for their wider models, which is somewhat articulated? But at the very least, and my point is another interesting commercial move. So again, and the last one, you were sneering at it, but moving away from all those models to the single model selector, it didn't work at opening, right? But again, it's the kind of thing you do when you're done with imagining, being the next Robert Oppenheimer, and now you're focused on what the product manager tells you will get 5% extra conversion among users, right? Someone in product marketing said, dude, we have to stop with these 6 different model names that make our users feel stupid and just make it simpler to use. All those things are, okay, it's time to get business savvy, not just, AGI is coming savvy. So I thought, yeah, that's what grinding it out looks like. That's what, every iPhone release after the first 1 or 2 look like. Similarly with every Microsoft Windows release after the first 2 or 3. It's like, once you had tiling in Windows, the next 15 years we're just grinding it out. Same thing with the iPhone. Maybe it's the same thing here. We've got the idea. It's a chatbot with AI. And now we're just going to be grinding here.
I think GPT-5 didn't achieve what Sam wanted it to achieve by July 31st. And you got to manage the team, even at the highest profile company on planet Earth. And everyone that's been a founder that's shipped software has had to make a decision. Do I give the team another month, another quarter? Anytime you do a release and it gets too complicated, your team always wants more time. I need another week, I need another month. And at some point as a leader, you gotta ship it. And we've been, earlier on this show, we had a Kalshi on when will GPT-5 ship, right? And it was all over the place. I think Sam said August is time, boys and girls. And if it's going to be underwhelming, I'm going to make the call that we're not going to wait for Nirvana. I don't have a firm date on what it was supposed to be. And I'm just going to box it up and ship it. And we're going to make some basic stuff better for Aaron Levy. We're going to cut some costs. And that's it. Maybe it's 4.9, right? Or 5.000. But this is just my theory. He decided there's so much attrition in this industry. There's so many resources flowing back and forth to Meta, to here, to there, that I think he just decided ship it.
I also think aligning to a $500 billion fundraise, it's actually better to get it out to continue to press on than to have continuous waiting.
Yeah. It's like the Replit $3 billion round. Just get it done.
Rory, would you do OpenAI at 500 billion? And do you feel more or less confident post GPT-5 about OpenAI?
I'm going to say more confident. And I'll tell you why. It goes back to what I said earlier, right? I think the grandiosity was totally necessary at the start. Because if you'd walked into people and said, we need to raise $30-40 billion, and at the end of it, we're going to ship this chat app that, trust me, people will use as replacement for search. That mightn't work as well as we're going to change the known universe. We're going to exponentially eliminate all labor. You got to be selling, when you had to raise 30 billion on nothing, you're selling dreams, the future of humanity. We're now at I got to make a business, converge roughly on profitability over the next 3 to 5 years. So just go on the business. It's a combination of just ship, run the business, make it better kind of next step. So yeah, I feel like, and the interesting thing is, I'm going to say this, and this is where I've evolved a little in the last few months just thinking about it, without any need for AGI or any of that rubbish, right? I think both of these companies can be plus or minus, $500 billion to $1 trillion companies. I think the opportunity, it's just so obvious that, everyone's going to be paying $20 a month and people are going to be paying more. And you get an interesting discussion how big the high end will be, which matters more for Anthropic than these guys. But they have the mass market, everybody paying $20 a month. That's a big ass company. And it's just from here to throwaway as such that you probably can see a 2-3x just on that. Probably some noise along the way. You might be ahead of yourself. But yeah, I feel they're on the destiny that's now locked in for them, which is to be the go-to place for information and for pretty much everyone on the planet.
I always think that actually AI is a bit like crypto, which is like, hey, don't fucking worry about all the underlying assets. You'll make money if you just invest in the core, which is Bitcoin. And I'm like, the core unwavering asset here is NVIDIA. Do we think OpenAI or Anthropic or Grok or you name it are going to win? I don't freaking know. With each month, the benchmarks change. The last humanities exam changes. Next humanities test will come. NVIDIA. They all just, NVIDIA.
What you're saying is true at some, which is sometimes just keep the main thing. And I often make that mistake because you try and and this is going to sound really cynical, but early on you listen to all the proselytization and all the crazy stories. And I'm very much a rationalist and I try and take them seriously. and I deconstruct them and I realize, oh, these crazy stories are bullshit. Therefore, the thing itself is bullshit. And that's wrong, right? All the stories, and every single thing that people said they'd use Bitcoin for in 2013, except maybe finding stable coin payments, has been bullshit. But the thing itself totally worked because it's got this, the store of value idea, the asset independent from everything else. Bitcoin worked, everything else, Ether to some extent, everything else, all those little weird coins didn't matter. Same thing here. The main thing is the main thing. You want to make the chips. You want to be the company that's, in an OpenAI's case, you want to be the company that's pretty much selling to every consumer. Looks like its market share is pretty hard to change at this stage. So you start multiplying. You'll have a paid tier at $20 times a lot of people. You'll at some point have an advertising tier, and plus or minus your Google with a subscription business. There you are. It's $1 to $2 trillion. Thanks for coming. Keep it simple. Don't overthinking. Maybe I'm not saying it clearly. I am often guilty of overthinking to the point where I've now learned to watch myself when I overthink. Sometimes.
I'm very lucky. I don't have the luxury of the ability to overthink, Rory, and so I'm always a simplistic thinker, which tends to do me quite well.
Those kind of internet meme graph where you have on the left total fucking idiot, in the middle overthinking it, and on the right not thinking at all, just like the other guy, and you win.
Listen, another element that's just like crazy is Perplexity trying to buy Chrome for $34.5 billion. I spoke to Aravind before. He said, legit, it's in their court. How on earth
Where is he getting the capital, just to confirm?
Well, that was my question to you.
From Elon? Elon had his capital secured a while back, didn't he?
How is this possible, guys? What did you make of this when you read it?
You can get tactical and say where would the money come from, but stepping back, why would Google sell? Just big picture points, just to cover for people. Why would Google sell Chrome? Answer: they don't want in a million years. The Department of Justice says they have to, and if they can appeal, and at some point maybe they have to. They don't want to sell this thing, right? The second question, that's interesting one, is what's the Chrome business worth, right? And the totally interesting thing about that is it's so dependent on who buys it, right? Because the asset itself, it doesn't have, Mozilla has $700 million, I think, of revenue, right? Reasonable market share. You don't get paid for owning a browser, to state the obvious, right? But the reason the DOJ is going on this is, as well as owning Chrome, which was one of Sundar's crowning achievements that got him the big job, building Chrome, Google also pays Apple for search placement on Safari, $20 billion a year. And the Department of Justice is looking at those two things together and saying, paying to be in the browser is bad. Owning the browser is bad. It allows you to continue your search monopoly, right? But the question is, so from Apple's perspective, owning Safari in the iPhone, where it's kind of a pain in the ass to change, is clearly worth $20 billion of profit a year, right? Is owning Chrome, how much is Chrome worth, right? In other words, how locked in, who would buy it? What would they sell through it? And how locked in would the service be? Ironically, the person for whom Chrome is the most valuable, if it wasn't owned by Google, would be Google. In other words, if someone else owned Chrome, the highest person to monetize Chrome is Google, because they have a search business. So they would probably, and the Department of Justice won't let them do it, but they would probably say, Harry, if you bought Chrome, you have no revenue source, but we will happily pay you $20 billion a year for all your search service, and you'll be, the richest single person company ever, right? So now you get to so it's a kind of a weird asset where intrinsically in itself, it has no value, but it's kind of a gateway to some product that does, which now gets to Perplexity. The thought process there is they're already building a browser. If they had Chrome, they could basically be the AI backend. Instead of having to build their business browser by browser, they would basically jam Perplexity into every Chrome user, and every person who's using Chrome today, including me, they would have some version of Perplexity as their default, AI engine, right? Great work if you can get it, right? And I totally get, now, is that worth 38 billion? Is it worth more? Is it worth less? Do they have the money? All those things, A, are unclear, and B, may not matter yet, to Jason's point. Is it real? But would a AI engine competitor to ChatGPT? Absolutely. Kill to own the Chrome user base? Absolutely. So that's kind of, sorry, long-winded answer, but that's kind of how you get there. And totally.
For what it's worth.
Do you think it's likely in any way, or is it a complete?
I assume Google litigate this to the end of human time. I mean, which actually gets to step back and say something else. I just got to get it off my chest, right? The Department of Justice gets around to killing American companies and technology just when they've become irrelevant anyway. We all had not irrelevant is the wrong word, just when they're at risk. The idea is, Google, think about it. The whole idea here is Google is so powerful and almighty that we've got to smash their search engine monopoly with legal remedies. When all of us here are talking about, could Google be screwed because OpenAI and ChatGPT could be a better product? It's literally not kicking Google in the nuts when they should have, right? When they were evil bastards for the last 15 years, grinding everyone down like Yelp. And then finally, when their backs are to the wall, now we're going to kick them just too late, when in fact they're now at risk. So and I forgot to mention, at a zoom out level, all this is freaking stupid. It's the Department of Justice. Because they take so long to make decisions, it's like they only started kicking Microsoft when Google was in the ascendancy and Microsoft was on the defensive. It's the same thing here. Leave poor Google alone. They're just a simple, humble, $1 trillion company trying to survive. So, dumb as rocks. Sorry.
Maybe just two things. One, sometimes I'm a little slow on marketing, but there's a huge amount of need in AI to do constant marketing. And there's a huge need to be one of the top two players, right? And everyone's doing a lot of marketing, Lovable, Project Lovable. Like, why are you doing these hackathons? Why is Bolt doing a hackathon in every city? Why is Sam Altman everywhere? Why is the Anthropic founders everywhere? I'm not even sure, even with NVIDIA, Jensen's everywhere, right? And he probably doesn't need to be, and I think it's important for Perplexity to be in that conversation because we can think of a lot of tools that aren't in the conversation. We talked the last couple of weeks about Cognition buying Windsurf, right? At least it was in the conversation. I mean, two of my portfolio companies use Devin, like their AI tool, and they love it for niche use cases, but we never talk about it, right? And so I don't think it's cynical. I mean, it's a little bit cynical. Because even if he had 38 billion, I'm guessing another suitor might come out of the woodwork. Like, I think Satya would raise his hand and say, I got 39. There'd be a few other folks, but you got like, to grow at the pace the AI leaders are growing, right? At this incredible pace, you do need to fuel the marketing engine. You need to fuel it aggressively, and you're not going to do it on AdWords and a few sponsored blog posts and SEO.
You absolutely have to. And I actually interviewed Aravind at an event, and I said, to what extent do you feel like a politician or a state leader where you actually don't do anything in the machine, but you just entirely speak for the machine? Yeah. And he said, that is completely my job. And that is the job of Dario. That's the job of Sam. That's the job of me. We are on the
Super
machine
important for them.
Shouting. And then you also look at the bluntly poor performers, and I hate to name people, but this is the show that we have, like Coherent, Mistral, and you also correlate that with who does next to no marketing or speaking publicly. Coherent, Mistral. I have no idea to the extent their models are good, not good, whatever, but they are both incredibly quiet and don't do press, and they are also the ones which people have deemed the losers.
You do have to do it. It is not there. Virality alone isn't going to do it. I guess the other captain obvious point is, one of the things that's very interesting in the media is where does Google stand today, right? Is search under massive existential threat? Yes, but search revenue's up, right? It's confusing, right? And I think the captain obvious theme is that no matter what happens, Chrome ends up being this accidental gem. Right? Chrome was built very strategically in the old days, in the desktop focused days, to counter, IE, which it destroyed, right? And then it's open source. So, Safari and Opera and everything's built on Chromium. They gave away the open source version. They destroyed everything. And then it kind of plateaued like a lot of software did, right? We had plugins, we took it for granted. Now it's the crown jewel in the age of AI, right? Is the crown jewel again. It's the return of it's not just the browser wars. It's the return of the browser being this core piece of software that we forgot about for the better part of a decade.
Only, first of all, agreed. And, I can't resist the Chrome wasn't built in a day statement. But moving right along, you're right. And it's only because for 10 years, Google won in the sense that no one else could monetize traffic anything like the dollars they could, which is what, so why bother building you could have these, niche browsers, but you couldn't build a humongous business because the only thing you could do with that traffic was monetize it. And the only place to monetize it at scale was Google. And the interesting thing now, to your point, Jason, is you can envisage a world where someone monetizes Chrome traffic via an ad-supported product. But there's also, ChatGPT is the astonishing consumer subscription product. What is it? 20 million, like 700 million free users, 20, 30 million paying consumer subscribers, I think is the numbers. So that's a very profitable business where the rate limiting constraint looks like your ability to sign up people, which means which is why Perplexity is smart. If you could get 1 billion people coming through your door, and if, 1 billion of them were free users and you have the same conversion rate as ChatGPT does, right, which is a leap, obviously, I doubt you would, but any kind of conversion, 20 over 70, that's about, it's about the 2% plus or little under 2%, which is what you see with freemium. If you get 1 or 2% converting into paid users, it's a compelling business. So suddenly Chrome matters, not because it got better, not because the browser is uniquely different, but because you can plug it into a machine now that can collect checks.
And do you know what? We're not talking about AI for normies. And this sounds incredibly condescending and patronizing, but AI for normal people. And normal people is kind of the slow laggards to adopt. And what I mean by that is...
For the record, normal people is not patronizing, but slow laggards is. So you might want to work. Yeah, I'm willing to be normal. I prefer not to be slow, but keep going, Harry. Be a joke.
Fuck it, I'll keep going with this. A great example of that is Threads, something that we all deem in our circles to be like, who the fuck uses Threads? Threads is actually a massive success, massive hit. And the reason I'm going there is because, yes, we all think ChatGPT is great and a massive hit, and 700 million is amazing. And yes, it is. That's unbelievably incredible and insane. I'm not doing a prior guest and saying it's not. But Gemini is great, actually. And it's getting better and better and better. And they will plug it into the core engine and the core distribution channel. And actually, for AI for normies, there's a real chance that they don't lose any market share.
You're right. For a good slug of the population, getting an AI answer, there are going to be times when AI answers meets your need on Google and you're done. There's going to be, Gemini as a model is actually apparently pretty damn good, even for coding, someone was walking me through. So, they're going to have market share. They're not going to roll over and die and the search revenues will go up. It's simply you've gone from a situation where you're the only game in town to a situation where these other guys are taking a significant slug. So, it's always better to be a monopolist than an oligopolist, but it's still pretty okay to be an oligopoly.
I do want to move to an insanely hot deal, guys, that really in Europe was a talking point for everyone, and it's N8N. It was done at $3 billion. Reportedly, it was at 40 million ARR, ending the year at 80. Excel led the round. Massive. It was I think the last round was not too long ago at 300 or so, give or take. It's not a new company. It's a 2019 company. How did you think about this?
With envy. Let's start with that, because in fact, we had talked to them in about 22 or 23. And you're right. What we clearly underestimated was, and kind of this whole, workflow automation. It's a category, pre-AI. It's a category. We'd looked at a lot of players. It's a noisy one. You have all the way from RPA to process mining to kind of low code, no code, and this big indigestible mass of things where every solution blurs into the next one. And it's just hard to know what's what, and therefore hard to build a big compelling business, especially with lots of competition. And clearly they did a brilliant job of co-attaching to AI, because when you go from automating workflows so people in a very deterministic way to actually getting more of the work done using AI, the value prop of your software goes way up. Instead of saying, we're going to automate a little bit of shit, now we're going to literally do the work and you can get rid of all these people that were doing the boring work. So they clearly did an excellent job of that. And in the space of 6-9 months, just massively accelerated, right? And, well done them. It just shows you got to stay on top of these things. And good on the guys. Highland, I think Europe did the last round. Good on them.
As I've gone into vibe coding, right, deep, right, I've reused Zapier so much at the low end, because I've got to hook stuff up, right, without wanting to code it. And if NAN is a more developer version of that. So I'm having a Zapier renaissance. But today, man, with the explosion of applications we're building and the explosion of things we want to connect with AI, it's like an order of magnitude bigger. It's an order of magnitude bigger. And maybe Rory, when you met them, you couldn't predict, right? It was hard to predict the accelerant that would happen. And it's probably in the last 7 months, right, from the revenue, right? And then boom.
Exactly right. And that's the aha. There are companies that you've tracked for a while that you mentally might be writing off. And what you can either decide it's not knowable, you bet randomly, you can try and track them just based on metrics, or the most logical thing, you sit down and you say, what areas will the model significantly impact in the next 6, 12, 18 months? And what are the companies that could benefit from that? And then the second criteria, and you've talked about this before, Jason, is it's all very well to say that there were probably 10 related workflow automation type companies. Which one of them will get the prize? I tell you, it always comes down to the founder who gets it the most, gets it the quickest, and just puts everyone in the room and says, no one's leaving till we're shipping an LLM-enabled version of this, and we're going to get it in front of 20 customers by Friday, right? And, in retrospect, that was the aha here. They clearly had those elements, and if you tracked it, you'd have made a lot of money here.
The thing that's really stuck out to me is Index and making everyone feel like shit right now. In particular, in Europe, Sequoia and Excel. Excel have to win. Otherwise, the gap widens more and more and more. And they won Lovable at any price. And now they're winning N8N at, I think, any price. I think it's a well-priced deal.
But they did that at Facebook back in the day when they were out of the game. They bid. What did they pay for Facebook? Rory, maybe 200 million or something, Preet?
500 million free.
They were insane. People said Excel was washed up and they had to bid up this fledgling social network.
I'm actually praising them. I'm not saying it's bad.
I think you're saying the same thing. And look, if you pick right, no price is wrong.
Yeah,
absolutely.
But I do think there is a retaliatory element from Excel of, oh shit, we have to, and this is an existential.
You know your European market better than me, and maybe because they're smaller. I don't. Humans are humans, so that kind of dynamic. It's a bad way to try and make money, and it's hard because we're all prone to regret, FOMO, decision about looking back and decision. But you'd like to think you just make every decision on the basis of, is it a good bet or not?
I don't know what you think, Rory. This is what I was taught. I'm not a growth investor, right? If you're writing one of these checks and you believe it's a winner and you see a clear path to 5x, right? So and you can deploy enough capital, you do the deal. Like not necessarily like in a certain moment in time. So if they believe this, 5x with dilution's a lot. It's got to be worth a $20 billion company, right? Or Lovable's got to be 20. They all got to be 20. But if you genuinely believe it and you overpay it and it keeps you in the game and it's for your brand, and it's not your whole fund, it might not be worth the bet if you genuinely see a 5x. The growth around zone all have to be 10x or 500x, right?
That is definitely true.
It's why to overpay to get into a good deal where you're not in a space, but it's not insanity if you see your way to 5x, right? It just might not be a 5x fund returner if that investment makes 5x in a growth fund.
Well, there's actually two things to unpack there. One is the 5x versus fund returner. You're exactly right. Growth investors typically, when they're looking at something, can say 3 to 5x. And the interesting thing is, and they'll say, and most of the time it's hard to go beyond that. And then by virtue of the power law, 1 in every 10 does. It's just like, it's not dissimilar in a way, it's fractally similar to seed, but just when they're much bigger, it's harder to envisage, right? But the truth, I remember a Facebook investor, an early Facebook investor said, they'd bid another deal, they'd lost it. And they said they could see a 3 to 5x from here. And obviously they made 100 times the money, right? So you basically just operate on the power law, and some of them turn into amazing, but you want to be able to say your base case is a 3 to 5x. That's totally absolute. That's the business they're in, right? Now you went from there halfway through the paragraph into some kind of, we should do it for brand, or we need to be relevant. At that point, what you're really saying is, I don't see a 3 to 5x, but I'm just going to convince myself to do it because I got to be relevant. And the sad thing is, sometimes that might be the right thing to do. When I recoil against it, perhaps wrongly, to be perfectly honest. Maybe there are times when you should just do that, but it's just when you're writing, it feels like, I remember when I was when they teach you in Catholic school about sin, and they'd say you start on little things and then it will just get worse and worse. It's saying once you start doing deals not for return, does it just get worse and worse forever? So I don't love I won't make my return, but it's good for marketing school of investing. But I also recognize that sometimes you can say, ooh, I can squint and get a 3x and it'll be good. And hey, sometimes you do what you do.
Do you know the funny thing is we have a like YOLO segment of our fund, which is like, which is a tiny pool of cash, whatever, like 2 million or 3 million, whatever. But it's basically, we have amazing access because of the shows, and people will give us positions at high prices, but we get into amazing names and it's good for marketing and brand. It's 7x as a pool right now. It's in, but at crazy
makes sense.
When we did it, we were like, this is total brand, never expected.
No, and I think that
but then and it's great, but then as you get later into the fund, you're like, well, so what? I got 12x. You'll make, I believe it, right? And then but it returns 5% of the fund is the problem, right? It's just
it's more.
And I think that the other problem with that is the Machiavelli quote, which is, that I've used it before, that circumstances change and people don't. And what works in one market doesn't work in another, right? That same strategy, when you look back in 21, it felt really sickly in 22, 23. It felt like, well, that wasn't the right strategy. Be more careful with it. And then obviously, whenever you're accompanying a boom and you're leaning in is the right strategy. And it'll be the right strategy until, pricing turns.
You know what it has? This is super narrow niche. It has one small advantage, that strategy, though, thinking back, because I accidentally did some of it pre-AI, right? Which is that it can get you early DPI in a fund. I accidentally did some of that, thinking back. And from my 2017 fund, I got about 20% of it back early from these early exits that had a nominal large value, right? And it doesn't matter at the end of the day so much, but you're going to hold some of your early stuff may take 15, 20, 35, 40 years to get liquid these days. So it's nice if you can get that early DPI, even if it doesn't matter too much in the long run.
Well, Jason, listen, me and you both are fortunate to have Horsley Bridge, who I think are one of the best of the best, and I love them dearly. But they've taught me really that venture is a very challenging asset class unless you take advantage of very small windows of hyperliquidity. Yeah. And so where I think about this is absolutely aligned to you. I'm leaning in, being very cognizant of when to lean out, and being very aware that this will fall off a cliff, but I need to time it well.
Yeah, I buy that. You always, there's 1 year in 7 where you make most of your money. And the one thing you don't want to find is you don't want to not have assets to sell when that year comes around.
I agree with that.
Yeah. But if you want to be a little cynical about venture, right? I do think, depending on where you are in your career, in your earlier funds, it is like everyone on X talks about DPI, but you don't want to sell your winners early. Like we've had that conversation too many times. And Horsley, I had a conversation with Horsley. I had a winner. I had a chance to sell for $1 billion, and they're like, don't sell it at all. It's not enough of a return, right? But it is nice if you go out to raise your next fund and you've got some DPI, right? So if Harry's little sliver is at 10x, and again, it's 10 or 20% of the fund, and you go out and it shows that this current fund is making progress versus all markups and no cash, it is cynical, right? But fundraising is just like founder fundraising for founders that are watching and listening. Like you got to put some points it helps to put some points on the board, right? So it's not bad to have return some of your fund at a nominally very high IRR and multiple, even if the absolute number, if you squint and you're like, that was only 11% of all that together is only 11% of the fund, let alone a 1x of the fund, right? I think it helps.
It also does amazing things for relationship builds with founders. When I look at a McCaw, when I look at a Perplexity, when I look at amazing businesses, honestly, me and Aravind chat a lot. Would we chat a lot if I hadn't have put a tiny check into the company? I don't think so. Not as much. There's no tie that's enduring. And so I think actually it does outweigh. So yes, moving on, you guys are going to be exceptional on this. And it was nuts week in terms of earnings in many respects. I want to start on Datadog because wow, best net new ARR quarter in company history, 260 million ARR in the quarter. initial reaction, pretty positive. And the stock is down 10% in today and lower than before results. And I just couldn't get my head around this, guys, honestly. It seemed great, and the market puked.
One of the things that when you talk to CEOs of public companies, and you should do this thing, other than the obvious, major beat, major miss, and we'll talk about one in a second, for all the middling things, if you talk to a lot of CEOs, and I remember we used to play this fun game on some of the boards where you'd know your numbers, and you wouldn't know the market's reaction to those numbers, and you try and speculate. And at least half the time you're wrong. It's actually a very fun game to play on a public board. You have the earnings call internally, the internal thing. You look at the numbers and you say, okay, the stock's 32. When we announce these numbers, up or down, and by how much? The error rate is massive. In other words, perfect information doesn't tell you shit. It's incredibly hard, other than the obvious. When you miss by 20% or you beat by 30, it's pretty obvious what happens. But in the middle, it's very hit or miss, which is the odd thing. I just offer that as a kind of a prelim comment. I remember watching my CEOs internalize that. So I've stopped worrying about it. I've really internalized it. Because remember, you know what you did relative to your budget. So you know how you feel as a board member or a CEO running a company. They're comparing your numbers to two things. One, their internal estimate of what they thought you were going to do, which you've no visibility to. And then even more zanily, the Keynes quote, what they think everyone else thought you were going to do to try and figure out what happens. And if you look at Datadog, the stock went up in the aftermarket, right? In other words, people looked at it and said, oh shit, this is good, stock up. Next day, it's like, oh, it's not good, go down. My big aha is, it's like dealing with a deranged madman trying to estimate what the street will do. I spend no time on it. Utterly unknowable.
So there's folks that are directly benefiting from the AI boom. They're selling AI products, N8N and others. Then there's folks that are benefiting because AI is exploding. So apparently OpenAI pays Datadog $240 million a year. Okay. And so what's happening is, and I'll give you a very small example. Harry and I are both investors in a company called RevenueCat that powers 40% of all mobile subscriptions. Okay. And it is already, its usage has already doubled this year from when it ended last year, even though it's not an AI company. Neither of these are AI companies, but RevenueCat's more extreme, but all the AI guys are using their product. So it's very exciting, but it also has concentration risk because there's only so many of these large players, right? There's pricing pressure. And OpenAI has already said they're going to renegotiate down the Datadog deal, as they should, right? So there's folks that are exploding not because they're AI, but because of the AI economy. But I'm not sure that's why it's up. One of the reasons it's up. But there's also a fragility when you're indirectly benefiting from this. But obviously that's a lot of incremental revenue for Datadog. A $240 million a year customer is high. But the incremental revenue and spend is from AI, right? If you're a B2B company, you got to go get AI revenue, right? Because you're not getting it from John Deere and the rest. They're spending the same.
You in fact, probably a little less. No, you're exactly right. Because that's the meta point, zooming out from this, right? Is that, you've seen the data. Almost the entire GDP growth is AI CapEx. So if you can co-attach, even if you're not AI CapEx, if you're not NVIDIA, if you can just co-attach to the money, you're going to get a pop. Now, it may not loud, but yeah, the spend is happening there. That's where all the CapEx is going. So if literally, I always think of what is the bill of materials to build AI? If I wake up tomorrow morning and said, I want to be safe superintelligence, I want to build me one of those LLM models, you just make a list of the things you need, right? And it starts with you need chips, you need a data center, you need power, you need some coders. And then you're right, it's all the little things. I need to keep this up and running. I probably need Datadog. I need, all the other software tools to make it happen. And if you just co-attach to that, it's the biggest single, it's showing up now. Funny thing is, the productivity is not showing up. The revenue is not showing up at the app level, but the CapEx is showing up in the GDP numbers. It's so big, right? So you're exactly right. And if you can get your piece of that, then I'd prefer to have it than not. People are saying, oh, it's a bad $120 million concentrated risk customer. It's a damn sight better than not having that $120 million customer.
No, and listen, I don't know how much of
But I'm sorry, is this a gift or a curse? And forgive me for my naivety, but the concentrated risk of 260, yeah. And if OpenAI continues its trajectory, it'll be 520 in a year's time.
Whatever. Exactly. And yes, it's a gift. We agree. I think both of us are saying the same thing, Harry, which is the people who are worrying about it. That's why you're getting into the second order derivative thing. Like the people trying to value the stock, they're not just saying, I mean, if you were the operator, you would be coming into your board and you're saying, we killed it this quarter. We signed a $100 million ARR deal with the most exciting company on the planet. It's freaking amazing. End of conversation. And no one is going to say, oh, I'm really worried that they might kind of reduce the price in 2 years. That's bad. They'd be like, dude, we're so happy, right? And as a board member, I would be too. Wall Street, as I say, it has this different role, which is not just guessing what you are now, but guessing, how you're going to be compared to what they thought you were going to be. And, they're paid to second guess themselves. As I say, my best advice is ignore it. Maybe 2 years' time, you'll be dealing with a renegotiation. But as you point out, maybe you'll be dealing with the fact that OpenAI is growing so quickly that the contract has doubled and they don't have the engineers to waste on kind of engineering you out, and you just take the check.
Are we just seeing like big-ish tech just win? Like just invest in big-ish tech. And what I mean by that is like AppLovin crushed, HubSpot gains, Shopify are ripping, Palantir obviously ripping. Like these are not Mag 7 quite. They're great companies. They're not just belong big-ish tech. The whole AI wave is mega.
That's true. I mean, I think there's maybe two things going on. One is, the AI wave is mega. And I think, definitely Palantir, probably Datadog, not so much, I would argue, HubSpot and Shopify benefiting from that, right? But then the second thing is, rather than this whole, oh my God, SaaS is dead thing, I think what you're saying is, and I think it's correct, is that these markets are big and huge. And if you're the winner and you're public and you've got scale and you execute well, add a little AI, you can defend your position, grow nicely, kick off a ton of cash. I wouldn't like to be a little startup trying to enter the HubSpot space or the Shopify space. But the death of SaaS has been overdone for the public market winners, which is a very different thing than saying you'd want to invest in, quote, the next Shopify at $1 million at $1 million in revenue, right? No, these guys, they have clear market leadership positions. They, in every case, have strong founder CEOs. They have profitability. And the growth reacceleration this quarter has been pretty real across the board. Even for, as I say, I'd put HubSpot. I mean, if I was to rank them in terms of their AI, HubSpot and Shopify are in that, they're using AI, but they're not direct beneficiaries as much. Datadog in the middle, because they got a big ass contract from the biggest company in AI. So they're kind of caught that. And then obviously Palantir, white hot in terms of their AI story. They have brilliantly become the way large corporate America implements AI at scale. It's a beautiful position.
Can you guys help me on Palantir? I always look at it and I go, amazing company, but oh my God, look at it. It's so overpriced. And every time I do that, I'm proved wrong and it goes again. How do you think about that? And legitimately, how would you advise me? I love these shows because I learn from you both.
I mean, the growth is friggin' breathtaking, right? It goes from 12% growth at about $2 billion revenue in 2023 to almost 45% growth at $4 billion in ARR. Goodness, I mean, this has never happened. Forget about the fuel, right? The secular fuel, the contracts are getting bigger, record number of 5 million and up contracts. The fact that they are the AI solution for both commercial and military. If I didn't even know how to spell Palantir or what it did, which I think most people didn't even know until 12 months ago, what it did, when you see going from 12% growth for a public company at billions in revenue in 2023 to almost 50 today, maybe Rory can come up with an example. I don't think in enterprise software we've ever seen that level of reacceleration ever, right? And so you can either say it's going to decay like all curves do, or you can say, good God, this is my, everyone in the public markets, they're 10 baggers. That's what my social media is full of. What's your 10 bagger, Rory? What's your 10 bagger? And it's if the chart keeps going, this is unprecedented in enterprise software.
Yeah, no, I look across 20 years, about only 1 in 3 companies reaccelerate for 1 year, and about 1 in 9, 1 in 10 reaccelerates for 2 years. So that's just the data.
That's daunting.
And these guys have reaccelerated significantly at scale for 2+ years already. So
Yeah.
I can see how you can build a model that says if you go from 12 to 23 to 45, you're right. The next question is, do you fill in 55 or do you fill in decay at that point in time? And the problem is, any exponential curve up can justify almost any valuation. I mean, my gut, Harry, is your instincts are right, which is it's an amazing company smack in the middle of 2 huge trends. We'll come back to them in a second. At the same time, 120 times revenues plus or minus is probably not sustainable. I mean, I saw the data. It looks like it was a good statistic. Someone says 5 years of 40% to 50% growth, and then they'll be valued about the same in terms of a revenue multiple as Google is today. So the interesting thing, and you can have 2 responses to that fact. Part of me says, oh my God, 5 years where you got to pull it off. That's a lot. And then you got to go, it's not crazy. I mean, you look at it, I would be terrified of buying it at that price. But the interesting thing about that calculation was you go, oh yeah, it's the beauty of compounding. Right? 5 years times 1.5, you just ended up in an amazing place. Now, I haven't checked that math fully, right? So that's kind of, it does feel incredibly lofty at scale. I mean, there's that great Scott McNeely quote about trading at 10 times revenues, where he just, walks through how absurd it all is when Sun was trading at 10 times revenues in 99. And every once in a while, you should reread that quote because he was totally correct and it went in tears. So intuitively, 122 times revenues is not a sustainable place. But, they got 3 huge trends on their side. They're the AI solution for large corporates. They are the AI solution for defense, which is having a boom. And they got the administration on their side.
Just this last quarter, they closed 843 in U.S. commercial bookings outside of up 222%. So help me with the math. 222% at 843 million. I mean, this isn't quite lovable growth, but this is pretty good.
Well, because I think, and this was
222% at 843 million, their commercial division.
And you've got to again step back and give credit to the founders and obviously Thiel and Book. In 2000, I think it was 2003 or 2004, with a sense of mission around 9/11, built this stuff, then moved into commercial. It was a slog for a while. Some of the early commercial customers weren't wildly successful, but they've ended up now whereby one of the things you figure out is big companies, there's relatively few places when big companies want to do big things with a project like this. It's not the kind of thing you can give to, little SaaS companies just starting out. Big companies need to spend big initiatives with big vendors. And the point is all the other big vendors are old and stodgy like IBM and Accenture. And now you can have these dudes who've been, working for the US government. They've got the whole forward deployed shtick. I see how it's working because corporate, I went through the last earnings and actually went through a bunch of the use cases in corporate, and it's all over the place. Yes. Supply chain planning, scheduling for an airline. It's a whole bunch of very different stuff. Right. And, so you say, how can a single SaaS app couldn't do that? But what they have is a platform that's been around 10 or 15 years. They have another platform they've added around enabling LLMs, and take the forward deployed engineers. And, you can squint. And I deliberately say this, not because you can squint and say a lot of it's services, but who the hell cares? The margins are 50%. And the reason they can get it is they can look, the CEO or the CFO of a Fortune 100 company in the eye and say, we've done 10 of these. You give us the $10 million, we'll get this puppy done. Right. And the other 2 competition is a little SaaS startup that says we have $100,000 product that's way more efficient than Palantir. It'll work, but it'll need a lot of work. And they're like, ooh, don't know about that. And the other competition is Accenture saying we're going to build it from scratch. They're just in that sweet spot of they can make the pain go. You can get your AI initiative as the CEO of a large corporate company. You give them $10 million. You got your AI initiative. They'll probably get it done. It's a golden place for the next couple of years. I mean,
what the other crazy thing about Palantir is, cut me off, Harry, if you want to move on, but I thought this was fascinating with Alex Karp. So they're a rule of 94 company today, right? Pretty good, right? So he said, he's on fire. Just watch his body language. He knows they're going to crush it, right? But he said that when they will be when they're 10x bigger, so at 40 billion, they'll have 10% less employees than today. And they're already on the trend to that. And I think there's a meta point, maybe needs a few more, but I think this has been well thought through. And this is a hint of the future in Palantir, right? This efficiency level. Microsoft has already reached peak employee, right? Google's already reached peak employee, but Alex Karp going on record saying at 40 billion in revenue, 10 times, we will have 10% less employees. I think it's the journey we're all kind of on, but he's out there because he doesn't give a rat's ass what anyone thinks in his farm in Vermont and sandals crushing the numbers, right? But to me, this is the future of B2B companies just trying to get to this, right? Massive, massive scale with few humans.
Yeah. I wouldn't pencil it into my model, but it doesn't matter because, as you point out, 50% operating margins today. Don't bother getting more efficient, just scale. So,
well, he's not doing it obviously directly for the margins, right? But it's how to structure the company. But this may be where the future is. Like he's so far ahead, he can make these visions and bets, right? And not be hiding in 7% growth. As some others. I just thought that's the future. I think this age of these bloated companies is and same what you talked about Shopify. Shopify is at 1.3 million in revenue per employee now. And it's reaccelerated. I don't think it has, we could talk about Shopify if you want, but the efficiency at Shopify is not at Palantir levels, but it's breathtaking, the efficiency. Toby's ruthless on this. And founders should be too. Founders should be ruthless on this. You don't need half your company, and Palantir and Shopify are proving it. You don't need half your company. You literally don't need half the people working at your company. You don't need them today.
I'm glad that half isn't listening to this show.
Work harder, learn your product. Ask yourself, are you actually valuable to your company? Be honest, not just are you a people person? What are you doing at your company where you're irreplaceable? It's not that you're going to get fired or anything. You may be moved out. It's just your future is uncertain if you're not irreplaceable. It's just uncertain.
You're not getting fired, Harry. You're just getting moved out.
Oh, there we go. It might be slightly hard to move me out, Rory. I feel a slight protective layer around me, but
your team should be uncertain. You may not need them for investing or content production in 2 years. You may not need anyone else helping you to invest.
I was more giving Jason a hard time on the
this is an interesting question. Do you want your team to feel uncertain? Do I want my team to be scared that they might lose their job? Now, it, in one hand, forces them to find the irreplaceability of their roles. And it also can make some people uncomfortable, horribly uncomfortable, scared. It's not a nice thing.
My learning is it doesn't matter anymore. There's so much uncertainty out. Like we coddled people since 2020, since the middle of 2020. And then we coddled them like there was no tomorrow until early 2022. Take 3 jobs, work 2 days from home. Life is easy. Like take care of yourself. And if you can, come to work, but take care of yourself, everybody. Take care of, and then Shopify had twice as many employees at the peak as it has today. Shopify, forget about them, twice as many. And Toby was telling everybody to relax, guys, in late 2020. Take it easy, guys. The commerce will come. Now he's friggin' ruthless, isn't he? He's ruthless. Zuck's ruthless. Karp's ruthless. And if you think you're going to win in B2B, if you're not ruthless, you're going to lose. So I don't think you should scare people. I don't think you should tell people, hey, if you don't step up, your job's over. I actually think that's a dated approach. Just step up and they'll quit. I'll give you a small example if you want this interesting. They'll just quit, right? There's a tool, for example, that we use. We use 10 AIs now at SaaStr, up from 0 at the start of the year, okay? But one is a niche tool called Momentum.io, okay? It's a cool startup. Rory, you should do the next round if you can, maybe. And it basically mashes up everything, Gong, Granola, everything, so that you have real-time insights to everything your sales team's doing, okay?
I turned down that pre-seed. Is it good?
It's a good product. It's a good product. It's not perfect, but here's my point. Here's what's interesting. It's not that it's like a lot of AI products. It's not that any individual component's all that interesting. It's how it synthesizes it elegant through AI. But I'll tell you, every company, and I got turned on to it then through Kyle Norton at Owner, and I brought it into other companies. Every single time it's been brought in, someone on the sales team has quit the first day. Quit every single time they quit the first day. Including on our little SaaStr team, someone quit in the day we brought it in. He quit that afternoon because the gig was up. The gig was up. And so that's why, Harry, I don't know if it matters whether you prepare the team, because there's going to be so much AI around us. The gig's going to be up one way or another. If you're not productive, if you were too busy to get the podcast out this week, if Harry had to do it himself, if you forgot to do the TikToks, the gig's going to be up across tech. So you don't have to coddle people or scare them, I think. They're just going to get a report every day that, you didn't push out enough code at Shopify, you're going to get pushed out.
I'm going to go back to the scared thing and because I'm thinking about it a lot, right? As you mentioned that, because it's always funny how we start off with the prepared script and then you just take a sew-off script, buddy. And I haven't spent any time thinking about this until you asked it, but I think there's a couple of different categories. I don't think it's great for society if everybody's scared all the time, right? Yeah. So at the kind of level of, there are jobs where it's okay. Like once upon a time, I ran a manufacturing company, right? And, at that level, the blue collar jobs are pretty interchangeable. If it doesn't work out in employer A, you can go down the street to employer B. I think it's good that the mass of people don't live in terror of, not being able to put food on the table. And there's a whole bunch of there's a whole bunch of jobs where, it might work out with this employer, but I can get roughly the same wage from another employer. So I got to follow the rules and work hard, but I'm not sitting there every day terrified, right? But what you're talking about, so that's one category. And frankly, most of the people have those kind of jobs. I mean, I don't want my teacher to be, teach my kids in national to be terrified. They should know that if it doesn't work out in this school, they can go somewhere else. That's most jobs. But there's two categories, maybe it's only one here, is if you're holding down a well-paid to extraordinarily well-paid job, right? And in an entrepreneurial company, and let's be frank, anyone getting paid $100 million over 4 years at Meta is extraordinarily well paid. If you're pulling down those kind of salaries, if you're an entrepreneurial company, you should be afraid. And this is very different because.
But ironically, this doesn't affect any of those. This affects the $100,000 a year marketer. This affects the $100,000 a year SDR. Which is, I'm not saying 100.
Yeah, they're going to be out of jobs, man.
But it's them that it affects, not the 100 million.
Yeah, and the point, the good thing about the $100,000 a year person is there are other white collar jobs at $100,000. I'm going to say this. I think I'm a compassionate person. If I thought that $100,000 person, their next best option was $20,000, I'd feel real empathy for them. But if you got $100,000 a year job that's going to be automated and your next best job is $95K doing something else, that's life. That's American capitalism. Get over it. Right. So I don't think, I think that's an appropriate level. I mean, you should feel the need to hustle there. I don't think that's quote fear. You understand me? You're putting on a weird face, like as if you disagree. You think that?
Well, no, I just think there's like a generation of 23 to 30-year-olds who aren't really masters of the craft in any way, don't really know what they want to do. And so they're doing SDRs or marketing and they're about to get a train hit them in the face and they're going to go, oh, shit. And
let me just give you a quantitative version of it.
But they'll pick themselves up and keep going because you're young, you've got a good education. It'll be a little bit hard. But,
Nah, they're checking out. Just to pull the numbers, because Toby did do the black and white at Shopify. Okay, let's look at Shopify for a minute. From peak employee was 2022, 11,600 employees at Shopify. Since then, revenue has grown 91%. Pretty impressive for a company at 11 billion in revenue. And employees have gone down from 11,600 to 8,100. Gone down while revenue's up 91%. So I'm sorry if you're worried about look at because Toby and Al was early on this. He went into beast mode, okay, and he destroyed the competition. BigCommerce doesn't exist. WooCommerce doesn't exist anymore. Amazon was never a threat, even though it wasn't a direct competitor. He went into beast mode. And he just got there earlier than the cracked kids in San Francisco. He just got there earlier. And Shopify is doing 91% more revenue with 30% fewer employees. And if you want to fight that, people would say I was toxic or it was hurting their feelings a couple months ago on LinkedIn. I'm like, I'm trying to help you. You want to be one of the 8,100 at Shopify or not? You got to decide because you can't leave work at 3:00 to get your salad and go work out. It's just not going to work. You're never going to learn the product. And even worse, you're never going to beat the AI that knows your product cold. This is the coming reckoning for these people, is that the AI knows every Shopify feature, and every AI at the Shopify merchant knows the products better than the humans. AI is smarter than most humans already. Pre-AGI, it is smarter. Have you ever talked to an SDR that even understands the product they sell? Any 22-year-old? Like once in my career have I talked to a 22-year-old SDR that knows the product better than me. It's worse with AI. These people are gone. Shopify is going to be at 7,000 to 200% bigger. You got to adjust, right?
Rory,
the ship's left the station.
And do you think, and this question here, scale. First of all, I agree with that. Look, the
Shopify numbers are stunning if you think about it, isn't it? 30% employee reduction, 91% revenue growth, and it's just starting. It's just starting. And that is before all the AI mandates went out, right? It's concurrent, but it started before everyone in tech is now, before you replace someone, find an AI first, aren't they? It's become the mantra. So it's going to accelerate.
And I'm just, again, yes, agreed. And I think but I'm going back to the scared comment, because it's funny, I sound like I'm arguing, but I'm actually agreeing. I think my guess is that person's paying $100,000, maybe they only get 80, but whatever. I'll respond to the thing you should be scared about is you should be scared is if you're on board something like Shopify, what you've really lost there is the opportunity to participate in 4 years of equity that could have made you $4 million, right? That's where fear. Anyone who's in the kind of, I'm scared every day because you should never take your job for granted, especially if you're in the kind of job you can make millions of dollars if you do it well, right? And I think that's the level at which you can be scared, right? And I think I look at those folks, they should have been scared. I think not because they went for the $100,000 a year job. I'm just trying to think of the equity of the thing.
I get you, Rory. The opportunity cost on the upside of the equity is insanely real. But but having come from a family that's lost everything, I worry about downside. And quite frankly, I don't think there's a ton of employers that are queuing up for a 23 to 30-year-old grad from a mid-university that's not a specialist in anything in a world of AI cost cutting and economic questionability.
No one wants to hire them. No one wants to hire them.
They'll have to suck it up and learn to do different things, but to a rounding error, they'll be fine. I mean, if you look at the graduate unemployment, the anecdotes are there, and it is higher than it's been, but I'm not going to cry for someone in their 20s who has to adapt, right? It's a very different feeling. Like, put it this way, the kind of fear someone feels at 55 when their job as a fill in the blank could go and they've got nothing ahead of them for 10 years. That's fear. Right, and I've seen that kind of fear too, right?
It's going to grow.
Yeah. With all due respect, you're right. I think we're actually in the end saying the same thing. You were partly overpaid. You could probably get another job. It won't be as good. It won't have the equity upside.
You're not even going to get another job.
They will. They will. I mean, they'll be fine.
Listen, until maybe 18 months ago, if any seasoned B2B executive that I knew needed a job, okay, that I knew reasonably well, I get him a job by an email. I could reach out to someone, not even in my portfolio, extended network, founders I met that I knew, met on 20VC, I could get them the job. Today, odds are 10% I can get them a job. 1, the fire's not there. 2, they're not willing to be cracked, right? 3, they're not willing to come to the office. 4, they don't know the AI tools. I can't get them a job anymore.
You're interesting, but you're jumping. Are you talking about the 50-year-old guy or the 20?
Yeah, now I'm talking about 35 to 55 to 95.
No, those folks.
I can't find them any jobs, the veterans. They're not.
Got it. And I totally agree.
Not a single job. I said go to Cisco. I said go to Cisco before Cisco realizes they don't need you.
Guys, the thing I love about these shows is learning from you. I learn from you on Palantir. I don't freaking get Monday.com. Has a good quarter. It's down 30%. What?
Well, Rory may have a more nuanced view on this one. I mean, I know the Shopify data and Palantir thing. I think Monday is actually the one that should worry us more as investors, right? Which is that Monday was priced to perfection, but growing to perfection, right? And I don't think it's this quarter. It's that it came up a little soft and where they thought the growth would be, but it's still elite. So the bar, this 50% at 500 million AR and never missing a quarter and keeping it going. We throw around all these numbers at Schmovable and Lovable and NAN, but man, the bar's high. That's the only reminder to me is just the expectations are so high today for the top performers, that the ones that have those outline revenue multiples, it's just so high.
Do you want an unfair question? Rory, I'll give you an unfair question because you love unfair questions. Datadog, HubSpot, Palantir, and Shopify rank 1 through 4 on what you'd buy. Datadog, HubSpot, Palantir.
I have no. I hate giving advice where I don't feel informed.
I can give you a guess if you want. While Rory thinks about it.
That's what I love, Jason.
I'm gonna take Shopify because it is gaining market share at scale. Okay, Palantir is growing at scale, and maybe it's gaining. It is gaining a certain type of market share. It's dominating government contracts. Don't get me wrong. So some people could criticize me for being simplistic, but commerce is the biggest part of our economy, right? Even bigger than the enterprise. Rory's got the numbers. And the fact that they continue to gain share is breathtaking, right? And what if Shopify has 80% market share and the economy is 80% e-commerce? Like, help me do the math, right? Versus 13% of all commerce already goes through Shopify, right? And it has essentially 90% of the platform market share. So this just platform lock-in, even in today's AI world, is kind of exciting, isn't it? It's kind of exciting to have lock-in.
Calvin, I buy your decision. I don't buy your logic. And let me tell you what I mean by that. I think, if they're all being bought in the same revenue multiple, I think the Palantir opportunity in terms of gross margin dollars is way bigger.
I was comparing 108x ARR to 17.9.
Exactly right. That's what I was going to say. Right?
That was implicit in my analysis.
No, that's where it gets. That's exactly right. Yes, because you have to say to yourself, and that's why I apologize, because you got to say to yourself, yeah, I think you have a relative. I mean, a VC would say, and this is perhaps the difference between the question. A VC, if you were to rank the size of the opportunity from here, I think it would be Palantir, Shopify, and then the other two is really top of the tier SaaS companies. And that's pretty obvious and straightforward.
You'd have Palantir 1 even with the enterprise.
Yeah, and it's the size of the opportunity, not valuation. And please don't misquote me. Right? Yes, because commerce is huge, but gross margin dollars, the ability to sell $5 million projects to enterprise to quote unquote implement AI just strikes me as a wonderful place to be for the next 5 or 10 years, in a way that while Shopify is huge, you do have, it's a more mature market, right? Palantir are on the white heat of this is new, this is exciting, and we have it, no one else does, which is where, Shopify, Datadog, and HubSpot were 5-10 years ago, right? But what I can't do in my head, and I'm not going to do because I'm not, is how, as Jason says, how do you adjust that for the fact that the market is well aware of this issue and it's trading at 120 versus 18? What are the other two trading at? I know Datadog is 15x revenue, and then I haven't checked HubSpot in a while.
Well, yeah, but here's the brutal one. Monday, which we talked about, off the charts good, right? After the correction, 8.4x ARR.
Dude, I bought the shit out of it. I'm going to be honest.
I know, but think about how many companies do we have in our portfolios that are better than Monday, that are not as good as Monday, that may be priced around higher than 8.4x ARR. Monday's the one, it's kind of soul crushing. It's like, you sure your portfolio is so good if it's trading at 8.4x, right? That's a tough compression to go, go down there, isn't it?
When the growth dies, all these businesses become very uncompelling in terms of valuation. You're exactly right, Jason. And I think that's why you have to be just growth bigots all the way on these deals. Because once they flatten out, it's 4 to 5 times if you're lucky.
Yeah, but even they're still at almost 30% growth. It's just, we're too optimistic about our portfolio companies compared to Monday.
For 20 years, up until probably 2019, the median SaaS multiple was 6.3-ish, and the median growth rate was almost 30%. And now the median multiple is closer to 6 again. The growth rate's 20, but the profitability is more, right? But for the longest time, it was, you only got 6x for 30%.
Well done, Rory. I think you did an amazing job there articulating the 4. You have Palantir 1, Shopify 2, Datadog 3, and HubSpot 4.
That's not what I said.
I think it is.
I said in terms of opportunity. You stitch it. Unprintable. Jerk out.
I think it is.
Dude. I did not say that. And if you say that, I did not say that. I said in terms of unpenetrated.
We're going to title this Rory's Public Leaderboard. Okay? with your face.
I look forward to seeing the new guest on your next show, Howie.
Mark Benioff is coming. And he wants to hang out with you, Rory. Okay.
Well, then you have to be nicer to me.
I'm going to be nice to you. Do you know what's amazing? After last show, Cliff from Canva, done. Yeah. What do you call him? Aravind from Perplexity, done. Jeff from Twilio, done. Mark Benioff, done. All wanting to come on the show. All fans.
Little do they know that when you come on, you just get asked stinker questions where you have one of your most successful CEOs in the mix, and you're just a jerk, Harry.
What's your net worth? Guys, we mentioned that, like, actually, where is the upside and where's the opportunity? Carter's State of VC Q2 2025 came out. A couple of things I want to dig in on, and then we'll wrap. But highest valuations ever for seed and A, I thought was an interesting one. And it goes back to what we said there about actually comparing to Monday. How do we feel about risk-adjusted where dollars are best? And how do you feel when you see highest valuations ever for seed and A? Do you see that reflected in your daily work?
But the Carta data and everyone else's data also says there's fewer seed rounds been done than 12 months ago and 24 months ago. So Rory would be better at slicing the data. Everyone that doesn't read the stuff, founders especially, be cognizant there's fewer deals being done. And it's worse than that because the deals are very specific, right? So it makes, forget about the breathtaking growth of AI native leaders. It makes sense if you're concentrating into winners, this would happen, right? We're also just concentrating into winners across the board. It's not just 10 deals for 40% of dollars. It's everywhere we're seeing concentration.
Agree. And that to me was the much more interesting point. The concentration. Sorry, Harry. The concentration in late stage rounds.
It's called revenge, Rory. Don't worry. It's fine. The leaderboard comment.
And the concentration in late stage rounds, is just amazing. Right. And, we run an internal process. We look at every deal done. We look at the total dollars. We do it every quarter. For the last couple of quarters, we've literally had to back out one or two deals because they just make the statistics so weird. Like in Q1, the deals we forecast in total, deals in our sweet spot, enterprise B2B, telephone, total, I think $12 billion in total dollars raised. OpenAI raised 40 in the same period. It's just like, literally twice our entire addressable market for us and 100 other A and B firms was done in one deal. That's a huge level of concentration. Same thing in, Q2. I mean, you have, interesting enough, in some deals, Meta gets reported as an investment in Scale AI because they, quote, put the money in, so in theory, it's a venture investment, which is absurd. But you have big round for Anthropic, X.AI, where literally, your entire sector is smaller than one round at the super late stage. That, I've seen concentration, but never to that extent.
The concentration's unprecedented, right? It just is what it is, right? People should be aware of it.
Is that a momentary element of time where we are in the cycle, or is that going to be a continuing feature of a new age of venture and technology?
It's probably not going to it's not going to go back completely to where it was. Do I think there's going to be a $40 billion round every second Monday? No, right? But there's no doubt. I mean, there's a couple of industries now that are now appear to be venture accessible that are fairly capital intensive. Obviously, LLM model creation, obviously a lot of defense. So there does appear to be a higher propensity to do more capital intensive industries. That's one thing. And then the second thing is, the more you stay private for longer, the more this becomes a phenomenon, right? Is that, it's literally it's the effect of holding them longer means they become bigger companies. Bigger companies just to run their balance sheet. You can, if you're running a $100 million revenue company, you can have $20 million on your balance sheet, cash flow positive, you're fine. If you're running a $10 billion company, even if you're profitable, you probably need a couple of $1 billion on the balance sheet just to manage fluctuations. So as these companies stay private for longer, there's going to continue to be this steady stream of fairly humongous later stage financings. And, and as I say, and then add to that the nature of the businesses, the model companies, the defense companies are, capital hounds in a way that, SaaS or consumer internet even wasn't. So yeah, I think maybe not as pronounced as now, but it ain't going back to everything being A's, B's, and C's and nothing be more than a $100 million race.
It ain't going back. And everyone that wants it to go back or give that dated advice, we had Brian Halligan was so good right before. If folks that got this far and haven't watched him, that was S tier. Go watch that one. And his point was when he's talking with Skoy, he's like, at best, half of what I learned at HubSpot matters today. It's true in venture, right? We're not going back. The AI is so much bigger than cloud and so different. And unless the LPs cut off the valve, we're not going back to the old venture.
Yeah, which has been a good fact for the large firms. Just to put it out, it's the synchronicity of people having a lot of money, putting it out in lots of deals in 2021, that not working, and you could have said, and I might even have guessed that the next stage of the movie was kind of real retrenchment on those firms because you'd seen that doing 100 deals at 10 billion pre didn't work, and maybe you can't deploy that much capital. But along come this crop of extraordinarily good companies like Anthropic, where you can deploy large amounts of capital. I think it really has provided justification for the opportunity for those larger funds to say, hey, look, you can put $1 billion to work in 2 or 3 model companies. And, you all will have thought in ventures, oh my God, there's no diversification. That's terrifying. And it's not our business. But I can totally see talking to an LP and saying, this is the only way to access that risk. If you want to access that risk, you need this vehicle. And that's why they exist. It's been marvelous for them.
Oh, I've said this before. I completely changed my stance on like the mega platform funds being able to deliver actually great returns. Because if you can move $1 billion into OpenAI at 30, like Josh and Thrive did, I'm not sure what their ingoing check was. Holy shit! There are very few opportunities where you can get a 10x on $1 billion. And actually, now with outcome scenarios being so much bigger, I'm much more bullish. Final one, and then we'll do a quick fire, or Kalshi. Do we believe in the one-person $1 billion startup? It's something that's so often hailed.
As a theme, Jason articulated the numbers really well. As a theme of less people doing more, yes. But it's kind of in the limit thinking. It's just hard to imagine. Like, by definition, you can't talk to any customers. Like, what would that person do on a day? $1 billion start, what would they do? Right? What would they not do? How would you run the key functions of a business? Like, who'd make doing the accounts alone? Stop. It's an idiot comment in the extreme, right? If you run a company with $1 billion in revenue, you're probably making some money. You got to file the tax. Maybe you can outsource everything, but you end up someone's got to meet the accountant. Someone's got to review the tax return. Like, even if your only problem is putting the fucking money in the bank and paying the taxes, you're going to need people. But is headcount going to be less? Absolutely. Is it going to be one? It's a metaphor. It's not a reality. Jason's going to argue with me.
No, 2 things. One, as I've said before, I take everything Sam Altman says. I think through it very carefully now in a way that I thought was marketing hyperbole going to the beginning of this conversation to get attention. Now I believe it's all carefully thought through and signaling. Look, I don't, the one person, it has a little structural risk in $1 billion company, a little hit by the bus risk, even if it were possible. I actually think that if you allow for some outsourcing agencies, resources that come and go, I think we will see a bunch of 20, 30, 40 person $1 billion companies because a core of engineers, a bunch of AIs and people are going to be like, you know what, dude, I don't want 100 sales reps. And if you're more SMB or self-serve and you don't need the forward deploy engineers of Palantir, I think folks are going to make a trade-off with AI and leaner teams. And they're going to say, I'll do more PLG self-serve, have a little bit of trade-off from humans so that 30 of us can run $1 billion company together. Software, you used to write software, stick it on a CD-ROM, and you'd write once and 1 million people will buy it. I think AI is going to be the renaissance of that. It's going to be the renaissance of that. And we will see it. And people want to work with 30 or 40 great people. And they're going to use AI to try to not hire the other 950. They're going to try to use it in any way they can. And at agencies, outsourced accounting like when we say 30 or 40 people, you're going to need a lawyer, you're going to need accounting, but it doesn't need to work for you. They don't need to work for you. And that accounting firm or law firm may be AI powered itself, right?
I kind of buy that as a better argument than the one person. Like, I mean, look, there's one there, and one says there are solo GP $1 billion funds today. So you can argue there you are, but they don't just have one employee, even a lad guild. They have some junior people, they have some account, you have stuff, right? I think Jason's description, it would be fun to get someone like, is it Basecamp or Zapier on here, who has probably run the thought experiment. If I've been running a business with wildly profitable with 50, 100 people, I'm willing to bet they've sat down and said, with AI, can you grind it down to 30, 40? What are the natural limits of a pure PLG software company? How far can you go and no further? Right. That would, because
but they're going to, I'm doing it accidentally. If we're lucky, it's not as easy, but if we're lucky, SaaStr Inc. will do 20 million this calendar year with two people. And depending on how you count them, like two employees. Now, we have other humans. We have outsourced accounting, which is great, right? We have some contractors, but we have 10 AIs and 2 people doing 20 million. And we sort of hate it, but we would never go back. Never, ever, ever go back.
How big is the house that you're buying in Yellowstone? Is it big enough for me and Rory to come and do a live show?
To support you and Rory in London for 3,000 people in London, there are some physical costs, unfortunately. It's not a 90% margin, right? But it does tie to the work, right? In a sense, right? And there's trade-off. Like, we could be doing more revenue, we could be doing more marketing. I don't want to do that stuff, and we don't want to do it. So that's why I think. But like, as I said, our AI BDR we deployed this week, it set up 3 meetings in the last 2 days for 6-figure sponsorships. That's the trade-off people are going to make. They're going to say, I'd rather orchestrate these AIs than deal with 100 people quitting every day because they want to go to yoga or weightlifting or they're not going to want to do it this generation. They're not going to want to do it. I don't want to do it.
You just load this generation. Maybe it's because I have kids.
I love everybody, but people just don't want to. If you can choose an AI, you're going to choose an AI over an unreliable resource.
But when I show up to SaaStr in London, there's going to be 50, 100 contractor people running a business. Just to be clear, to be correct,
there'll be 100 people scanning badges, and so that's my original point. There'll be transitory resources, but the head count and going to your earlier point, this is to Harry's point, the equity will not go to those people. The equity will get more and more concentrated. That means people will make more and more money from equity, right? But it will become isolated in fewer and fewer people making more and more money. We're already seeing this in the big AI wars, right? We're already seeing the $100 million engineer packages. We're going to see the best salespeople that are orchestrators be able to make 10 million in sales, not 1 million, which is what a top rep's today. We're going to see the top sales folks make 10 million, but they're going to be AI fueled, and they're not going to have 200 reps under them. They're going to have 10.
Yes, and
they'll get $10 million bucks.
And to be clear, and the other 90 reps will have intermittent jobs scanning badges at SaaStr. And this is your point, where if you had a $500 million business, you won't starve because you can get jobs scanning badges at SaaStr, but you won't be living the life you led. That's your point about fear. Going back, I've been thinking about what you said earlier.
It's a real issue.
And I think that's, as I say, I really hope we don't live in a world where everyone's scared, because that's not great. But if you're getting more than the national median wage, you should ask yourself, are you contributing more than the national median amount? And the more you're getting, the bigger the gap. And you're right, there are a lot of jobs in tech. I do believe that, where the gap between what you're getting now and the gap you'll get in your next best use could be 70, 80% of your current income. And that would make me scared. So I'm coming around to the view that you're right. Unfortunately, more people have to be scared. It doesn't make it a great world, but you're right. Even at the 100 to 200K level, you probably won't get a replacement slot.
Jason, you see, we're even convincing the great master.
No. I'm convinced by facts, and eventually Jason won out. His statistic about 2 people running his business blows me away.
But it's not. But we're at we went from the non-bleeding edge to the hairy edge of the bleeding edge. It wasn't all by design. It's so hard to find people, right? That what's happened, we've inadvertently done the Toby thing. We're like, enough already, right? We've had people that made $500,000 in sales quit because they didn't want to work past 5 o'clock. Or we had one quit because he didn't want to enter his data into Salesforce. Never made as much sense, okay? So you got to be like, I don't want to go through that again. Like at this point in life, I'd rather hire an AI. And we spend 2 hours a day orchestrating them. Rory, here's the thing. We spend 2 hours a day getting them to work, but they don't quit.
I'm really intrigued to see what that orchestration input looks like in a couple of years' time.
That's the job that you need to get if you're not running your own fund. You need to be a chief orchestration officer. This job is worth $500,000 today. Everyone's hiring this one. This is the job you need.
We're going to do a Kalshi quickfire. Kalshi is obviously this prediction marketplace, bets on cool real life things. I'm going to create my own first one and following our conversation because I really want to. Palantir, over or under 5-year market cap, $2 trillion. Its current market cap is circa 450.
I love the company, and they've exceeded all expectations. I just think compounding to $2 trillion from here is pretty damn hard. So I'm a no.
Gosh, I'm pretty decisive. I'm just comparing that to Salesforce. Salesforce at $40 billion, worth $222 billion. And now I'm feeling gravity when I'm looking at the number one and number two by market cap. It's, Palantir is worth almost twice as much as Salesforce as we write this, and Salesforce is number two, right, at $40 billion. So I'm looking, and the AI is bigger than cloud, so that's the reason it's going to happen, right? But I'm worried about a gravity when Salesforce is only worth $222 billion as we record this. So I want to take this bet, but I'm gonna go the under.
Okay. We've got, when will Stripe officially announce an IPO? Before June 1st, 27 or after?
The correct response is, does it matter anymore? I mean, they're so post-public. I don't know. It trades all the time. I mean, yeah, I'm sorry. I'm being a little bit like, whatever, cash flow positive, wildly so. They're just doing their thing.
But do you think they will go public in the next 2 years?
Yeah. As I said, I'm going back to what I said, because if the cost of capital gets markedly cheaper in the public markets, then maybe. But they seem to be more resistant than most, and there's nothing going to make them do it because they're strongly cash flow positive at huge scale, and there's liquidity. So the truth is, it's an idiosyncratic bet, and the Collisons haven't shared their opinion with me. So hell, I don't know.
Very honest, thank you, Roy. You're not chatting to them in an Irish WhatsApp group
over a beer in the studio,
over a cheeky pint with Dario. That was a very, very important sign, I thought. One of the best fintech founders in the world is a moderator to Dario. I just thought it was ironic. 10 years ago, people were like, Harry, media will never work for you, dude. Just to let you know, it's not a thing. Okay.
True. I think I think Stripe do a super interesting job in media with the publishing and all that. They're just, more than most companies, there's an intellectual curiosity there, which I find the most attractive thing about that company. Unlike the one
totally agree.
Public, which is
I meant it as a compliment. No, I didn't mean it badly.
I know you did. I just want to pile on it now. Yeah, it's two smart people talking to each other. Unlike the.
Okay, let's do a final one. Will XAI sue Apple? There's odds for this one, and I know you like your odds, Rory. So yes, $100 gets you $209. No, $100 gets you $151. So Elon has made it pretty clear he's very unhappy with Apple.
And he's already sued OpenAI. There's a precedent there, right?
Yes. Not because he appears to have a propensity to pick fights with everyone, which is just fun to watch. B, because his dispute with, the only reason he would have, it's all about the dispute with ChatGPT. And to some extent, I saw a good tweet that basically said Elon's wrong because the whole idea that Apple's going to favor anyone, they don't need ChatGPT to be wildly successful. They need to figure out their right. So it's a marriage of convenience. Maybe the better answer is this. If Apple continued to be, quote, aligned with ChatGPT, then probably they get drawn into it because the ChatGPT versus X.AI fight is going to be existential for a long time because that's both it seems to be both personal and business, because you have the old X.AI business. So that fight ain't going away. So anyone getting sucked into that could get pulled into the mess. So to the extent they are, then yeah, so probably not a bad bet. It's kind of like getting named in the lawsuit. You didn't do it wrong, but you're dealing with someone that did something wrong to me. So I'm just going to pull you into this mess and depot all your executives anyway.
I think it makes sense. I mean, suing Epic was Epic suing them was sort of worth it, right? At the margin. And he's incensed, and he's got a lot of money in XAI. I mean, he's the richest man in the world, but he doesn't have unlimited capital. So I think it happens.
Guys, as always, I so appreciate this. I want one final question from you. You gave me a target of like someone to get for the show. I think I delivered with the people that I've lined up. If you were to add one more name, who would you say it is?
Well, look, for what it's worth, Alex Karp's always been my dream since the beginning of SaaStr. Asked every single year since like 2015. So personally, if he has the energy to do it from his farm, that would be my dream.
Guys, you are awesome.
Yes.